Hello friends, Namaste and welcome all of you to my channel. Today's discussion will be more about the concept of receivable. The term receivable arises when we have a credit sales, and normally we can't avoid the credit sales in our business. The market is so competitive, you can't say that you are not going to sell the goods or services under credit. So naturally there is a good scope of analysis of receivable, and being working in the credit department, your job is to analyze the your credit risks, right? So I believe that whatever I discussed today, that would enrich your concept of simply receivable term itself. Receivable could be categorized into account receivable and the note receivable. Today's discussion would be more about the how we record the journal entry for the account receivable, the concept of note receivable, including the component of note receivable, including, and the lastly I will be discussing the uncollectible account, friends. Okay. Now based on this background, let's move to the discussion on the first of all, what we understand by the account receivable, friends. Account receivable, which is also known as trade credit, simply it arises from the selling of the merchandise or services under credit, and where customer, or you can say that buyer, debtors provided you the verbal promise to pay it, right? However, when the account becomes uncollectible, bad debt expenses is incurred in our business. Now look at your first example that would clarify the whole concept of account receivable. Like on like a, assume that the John company on July 1st, 2024 sold merchandise on account to Polo company here. Polo is the buyer and seller is the John company for 1 lakh, while the credit term is 2 by 10 net 30. That is, if the Polo company pay within 10 days, would enjoy the 2% discount. That means seller would provide 2% cash discount to induce the early payment. That is the point, right? And while the sales return and allowances we have a 10,000. Now what would be our journal entry? Required journal entry on this date, you would be recording, that means seller would be recording journal entry like this: account receivable account debit 1 lakh to sales revenue account, and you would be following the format of journal entry, right? Then next one is that sales returns and allowances account debit 10,000 to account receivable account, right? Then third one is that once cash would be realized by the buyer on July 11, that means after 10 days. So in that case, seller, that is the June company, would realize the amount of just 98% of 90,000. Remember, not the 1 lakh. 1 lakh minus 10,000. So you can see here that is the 90,000. How much cash would be realized? That is, simply you can see here, use your calculator like this, right? Our, like your 90,000, what I did here, 90,000 means you have to exclude the sales return and allowances. Okay, is the 0.98. That means cash would be realized by the June company on July 11, 2024 is just 88,200, while discount allowed would be, one hand you can say that 90,000, that is 90,000 minus 88,200, that is 1800, right? That is the discount allowed, or directly you can say that 2% of 90,000 to account receivable is the 90,000. This way you could record the journal entry for example number 1, friends, which clarify the concept of account receivable. Now let's move to the note receivable. Now this is the case where the customer provided you the written commitment to the seller to pay the dues figure, and that's why this is also called bill of exchange or the promissory notes. And it is, that's bill of exchange, it is drawn by the buyer or the creditors on the customer or debtors, you can say that, right? And that is why it's is all about your, you can say here, that is the debt arrangement, you can say that short term debt, right? And it is the interest, note is interest bearing here. Seller, since seller take the credit risk, that's why they would charge the interest too, right? Now let's move to the discussion on the what could be the components of the note receivable, right? Then note receivable, and in the book of buyer we say that that is the note payable, right? Then first one is that your, this is the principal value. Principal value is all about face value of the note, right? Then maker means maker is the individual who signed the note, and assume the responsibility as maker is the buyer here, right? And the pay is the seller who would receive the payment from the buyer, and maturity date is all about your time period. And next one is that your interest rate, as I explained earlier, is the note is the interest bearing. So let's discuss about the second example. This is about your Golcha company sign a 90 days 20 lakh note payable to the Chachan company. Now look here, that is the Golcha company signed. Yani Golcha company is a maker here. Maker, yeah, you can say that buyer here, while Chachan company is the pay, yeah, seller we say, while interest rate is 12%. So in that case, simply what you need to do here, look at your face amount. That's face amount as per this question is 20 lakh. Okay, 20 lakh into 0.12, that's 12% into, this is for 3 months, 3 by 12, or you can say that 90 divided by 360. So you would have a simply 60,000 is our interest. That interest would be received by the seller. That means that needs to be paid by the buyer on the maturity of the notes, right? Together with the its principal value. Now let's move to the other concept, credit terms. As I explained earlier in the given question 2 by 10 net 30, that means credit department play the eminent role to analyze the credit policy, yeah, credit standards, because one credit policy may be appropriate for one group of customer, but it may not be good for other group of customer. So rationally, the credit department needs to analyze the 5 C's. We say that even we discuss this component in finance too. That is the one is the capital, collateral. Second is the character. Third one is the collateral. Fourth one is the capacity, and the last one is the condition part. But remember, friends, that is all about the, when we say that uncollectible account, regardless how diligently the credit department analyze the overall 5 C's. However, there will be some customer, they might be default. Yeah, they would not pay on time, right? And they would be referred as a, this account would be referred as a uncollectible account, or you can say that that is the, simply we can say that is the bad debt. Okay, and it happens because of some point like errors in judgment of the credit department, right? Then next one is that unexpected financial problems of the customer. Sometime we do the business, but in that case, if we don't have the good sales revenue, in that case your cash position may not be good, right? Then we face financial problems. We may not pay the dues figure on the time, and that may be the question for, yeah, issues reason for bad debt, yeah, on a collectible account. Yeah, we can say that downtown in the general economic condition that we are facing in Nepal these days, right? Because of political unrest situations, yeah, political instability, and we don't have good business these days, right? So in this case, you you would have a poor sales, and naturally you may face the financial problem. That is the case. Okay, so bad debt expenses, we can say that is the normal business expenses, friends, that could be expected by those firms selling the goods or services on the credit basis. If you are selling the goods or services on cash basis, there is no question of uncollectible account. In that case, seller would record a journal entry simply cash account debit to sales account. But remember, when they would deal with the credit sales of the goods or services, then always good to analyze the receivable properly, friends. Okay, in the coming days, that means in next day I would be discussing is all about your methods of uncollectible account. Basically, we would have two methods. One is called write-off methods. Next one is that allowances methods, friends. Okay, friends, I believe that whatever I discussed today, that would again clarify your concept of receivable term itself. If you like this content, please like, subscribe, and also share this channel. Thank you all of you for watching this video. Please take care all of you. Thank you.